Hello, my name is Jim Suglia, and I am KPMG's segment leader for our alternative investments practice. The past 45 days have been truly unprecedented in so many ways, and with more uncertainty ahead will no doubt impact our people, our daily lives, financial markets, and the economy. Our alternative clients in the U.S. have been faced with a lot of adversity over this period. They've risen to the occasion for sure. They've taken care of their people. Their investments have performed. They've been communicating frequently and transparency with their investors. And incredibly, they've been doing all of this while almost overnight going into a BCP environment, working virtually, and making sure that they're managing the risks associated thereto. While some clients have had some challenges stemming from market volatility, increased credit risk, credit spreads, valuation challenges, overall our clients have performed as anticipated, and they see long-term that there's an opportunity for investors to increase allocations to alts as a result of this. In the near term, there may be some redemptions really stemming from clients' needs for liquidity purposes and liability management. I think there will be some impacts, and when I think about lessons learned from this, there will be some modifications to firms' business models, but I think the real impact will be in operating models. I think there, you look at continued fee pressure, you think about what it may look like in terms of business in a new norm post-COVID-19, and you think of the impact on margins between fee pressure and maybe migrating into this new norm. I think there'll be a lot of focus on cost. Additional outsourcing, potentially in the areas of IT, data. Some firms are thinking about consortiums for commoditized type of functions, doing that with some of their peer group. And then you think about costs and things like digitization and how you deal with fundraising in a digital world that has less people traveling. Also, many of the leaders I speak with are starting to think about the workplace of the future. I think there's no doubt that it's going to be a trend to look at additional balance between being in office and working virtually or working remotely. But I think there are a lot of risks. The two that most folks are focused on right now are starting to think about would be associated first and foremost with culture. How do I maintain a balance between in-office and virtual working, but keep the strong culture we've worked so hard to build over the years? And then the second is obviously a lot of the technology and cyber-related risks that would occur when you're dealing with a more virtual environment. I think there's also probably an opportunity in terms of workspace and looking at more collaboration, and that will evolve over the years too. Anyway, these are some of the things being discussed today, and things will continue to evolve, no doubt. The waters may look murky for our clients in this environment today, but our industry is known for innovation, for dealing with disruption and adaptation, and I have no doubt that we will be navigating these waters successfully.